Where do I begin to invest my money? This is the most asked question by people who aspire to start investing. Don't worry though, by the end of this video, you will know where to invest your money and you'll clearly have your answers. For those who are new to this channel, a stock is basically a fraction of a business that symbolizes ownership in that business. In this video, I will show my top-down analysis in a company that I invest in very simple layman language. Thank you. Without further ado, we will begin by analyzing a certain well-performing company that is listed in the Salaam Stock Exchange. And this company is in the banking industry. So, in investing, you have to pick an industry that you'll be more comfortable in understanding it and knowing the sources of income that it makes. This will help you to be very objective and to focus your attention in one thing or in one asset, in one niche that will help you make much more wealth. The company that I'm going to use is listed in the Salaam Stock Exchange and it's amongst the best performing companies. It's in the banking industry, therefore, what do I look for before investing in a banking niche? First, I have to understand how a bank works. It accepts deposits, it gives credit. Those are the main functions. It helps in advisory, it helps in treasury, in buying bonds, etc. So, these are the things that I would first consider before investing in a banking niche. First thing, I would look at the regulator, the monthly economic reports that are produced monthly on a monthly basis by the regulator, of which in Tanzania is the BOT. I'd like to give a lot of credit to the Bank of Tanzania for its wonderful monetary policies that help the economy of the country to grow sustainably. Without further ado, the things that I'd focus in the monthly economic review are very few and very simple. The first thing is the inflation rate. When the inflation rate is low, it gives much more sustainability for the bank performance. In Tanzania, as of April 2025, the inflation rate of the country is well below the target, the 5% target, therefore ensuring high value of money and profitability in the bank business. And the GDP of the country has grown by 5.2% in the fourth quarter of 2024, showing great prospects for the banking industry. The last but not least is the central bank rate, or the CBR. If you don't understand what this means, don't worry. We'll go ahead and explain it. The central bank rate simply means the interest rate at which the central bank commences or offers loans to the commercial banks. When this rate is low, it ensures high liquidity and banks can lend much more money from the central bank at a lower rate, and they can offer the loans to the public, to commercial users at a much lower rate. However, if this rate is high, the commercial banks will borrow money from the central bank at a higher rate and offer loans to the public at a much higher rate. The Central Bank of Tanzania, however, has kept this rate at 6% for the fourth quarter in a row, showing sustainability in liquidity as well as keeping the inflation rate below the target. That is the simple industry analysis of the banking sector. Now, I will give a top-down analysis on how I analyze one of my best performing banks listed in the Salaam Stock Exchange. So these are the first quarter results of Bank ABCD listed in the Salaam Stock Exchange. The performance was so tremendous. The earnings were high, giving an opportunity for investors to gain more as long as they invest and they buy the stocks at a reasonable price. In the banking industry, one of the most important numbers to look at is the non-performing loans. What are these? This is the fraction or percentages of loans that are not paid. So, the most important number that I look at in the bank before I choose to buy its stock is the NPL. The NPL is the non-performing loans. Non-performing loans refer to the percentage in shillings of every 100 shillings offered as loan that fails to be paid back. The central bank requirement for non-performing loans is it has to be below 5% for that company to be able to pay dividends. This bank has been able to keep sustainably over the years the NPL below 5%, and right now it is at 3.2%. The other indicators that I would look at is the loan-to-deposit ratio. The loan-to-deposit ratio in Bank ABCD is 93%, ensuring sustainability when depositors need their money, as well as the bank's objective to offer loans without causing shortage of money to the depositors or to the clients when they need their money. Also, the bank's deposit grew by 26% year-on-year basis to 12 trillion, while the loans grew by 24% year-on-year basis to 11 trillion shillings. Also, provision for loan impairment grew by almost 100%, ensuring that the bank has enough to cover for the loans that are not paid back. Therefore, this provision covers the risk on the loan portfolio and it provides a good cushion against shocks and risks. The net profit after tax grew by 36% to 173 billion in the first quarter of 2025. What else do you need to be told that this is one of the best investments yet? Now, this is the crude and raw analysis that I've handwritten that helps me and guides my buyers before I invest. First ratio is the PE ratio, price to earnings ratio. In Swahili, I can call it this way. Huu ni uwiano wa bei ya hisa moja kwa pato kwa kila hisa, earnings per share. I just want to make sure that the PE ratio of the stock that I'm buying, that is in the banking niche, is below 5%. That means I'm buying high earnings at a lower price. Remember, the key is always to buy at a discount. Therefore, if the PE ratio is below 5, my decision is good to buy. The other ratio that I keenly look at is the value of the stock that I'm buying. In this context, the value per share of this bank is 910 shillings, while its current market price is around 790 shillings. That means I am buying something worth 910 at 790 shillings. Therefore, my decision is good to buy. Also, the third ratio that I consider is the return on equity. This ratio tells me how efficient is the management in using shareholders' equity to generate profitability. The return on equity on this bank is 29.16 in this first quarter of 2025. That means in every 100 shillings that I invest, the bank can generate 29 shillings as profit while keeping the 100 shillings safe. The biggest caveat and the biggest consideration you have to give to this indicator is that it has to be greater than the 10-year bond that gives us 11% to 14%. So if the return on equity is greater than 11 to 14%, that means it is much more worth it to invest in that stock, perhaps, than the risk-free treasury. Therefore, since this bank, the return on equity is greater than the return on 10 years treasury, the decision is to buy. In Swahili, the return on equity is rejesho kwa kila usawa wa umiliki. The other thing that I look at is I want to be sure that this bank can give us or can give me dividend at the end of the year, or it gives me return at the end of the year. That's the main aim of investing. I have to make sure that I profit out of it. From the Q1 results in 2025, the projected dividend of this bank that I projected using the 30 to 35% payout ratio, I project that if this Q1 performance is consistent, they may choose to declare 77 to 85 T shillings per share. Given its current price of 790 shillings per share, I find it a stock worthwhile to invest. The most important ratio that serves as a condition for the bank to issue dividend is the cost to income ratio. This shows the relationship between the operating cost of the bank to the income that the bank generates. The condition for listed commercial banks to offer dividend is that the cost to income ratio has to be below 55%. In this bank, the cost to income ratio has sustainably been below 55%, and in the first quarter, it has been 41.7%, ensuring and giving confidence to the shareholders that it will pay dividend to us at the end of the year. Therefore, this is a good decision to buy. We have reached the end of this video, and I believe by now you have an insight on how to look at a company from the industry perspective to the specific company perspective, so that you may be able to draw a bias on how you can analyze and what things to consider before choosing to invest in a certain niche. Join us in the next video for more lessons like this. Hi, I am Victor Emilian Busara, a Certified Financial Educator by the Bank of Tanzania. For more lessons like this, kindly share, like, comment, and subscribe to this channel. Meet you in the next video.